How could you earn money in that scenario? If you're not earning money and someone else is, how do you start earning money in that scenario? That's the interest cost. Every purchase has that cost, whether it's visible or invisible. And like I said in the opening, most people think that they're not financing daily life. They just, money, when I buy something, I'm paying for it. I'm giving value. It's an exchange of value, and that's it. What the reality is if you're paying cash, you're giving up the opportunity to earn interest. If you're paying or if you're financing it through someone else, you're paying them interest. And I always joke around on my calls, do you think the banks are giving you a loan? It's not because of our charm. It's because they see us and they say, oh, that guy or gal, they're going to be able to pay interest for a long time. Look at their credit score. It's really amazing. Before we get into the numbers today, I want you to think about the last big thing you bought. Even pop in the chat. Maybe it was a car, maybe it was a business, maybe it was a practice, a vacation, or just the rising cost of daily life. And how many of you have ever stopped to ask, who made money on this decision? And how many of you realized you financed it, whether you meant to or not? Because here's the truth that no one really tells us. You either pay interest or you earn it. There is no third option. And so, as always, if you're listening today, you're already thinking differently than most people. So welcome. High five. And second, props to you for showing up. That means you're ready to stop letting money slip away unnoticed. In this episode today, you're going to learn why your money always has to have a job and how to give it more than one job at once, 3 jobs. The difference between financing with someone else's system versus your own. 2 ways to capitalize your family bank, one fast, one slower, both real, both proven. And what actually changes when you stop being a borrower and start thinking like a builder. And look, I didn't grow up thinking about banking. In fact, I didn't think about money at all. Most of us didn't. But when I hit a wall at 46, realizing that it didn't matter how early I showed up, how long I stayed at work, how hard I work, I had to see why I was always last in line for my money. And I'm going to show you that today. And the reality is I didn't need more income. I needed a system, a different system. And that's what we're going to unpack today. I'm going to show you how to flow your money, not just the amount, determine where you're stuck, and finally build freedom. And we're going to walk away with these 2 real world examples, one from my own life, like I mentioned, and one from an actual client. So you can see exactly how capitalizing your policy fast works, how capitalizing your policy slow works. And by the end, you'll know which side of the interest equation you're really on. We're going to get crystal clear. So let's get you on the other side so you're always earning interest since you finance everything you buy. So let's jump into it. Like we said earlier, think about the last big thing you purchased, whatever that might be. And I really want you to think who earned money or who's earning money in that scenario. It's a really important question to ask yourself, like who's earning money in that equation? And if it's not you, then, I was thinking about this the other day. If it's not you, then start thinking about how could you earn money in that scenario? If you're not earning money and someone else is, how do you start earning money in that scenario? That's the interest cost. Every purchase has that cost, whether it's visible or invisible. And like I said in the opening, most people think that they're not financing daily life. They just think around thinking that, money, when I buy something, I'm paying for it. I'm giving value. It's an exchange of value, and that's it. What the reality is if you're paying cash, you're giving up the opportunity to earn interest. If you're paying or if you're financing it through someone else, you're paying them interest. And I always joke around on my calls, do you think the banks are giving you a loan? Because, we got a good looking group here. Don't get me wrong, but it's not because of our charm or our wonderful smiles or our personality. It's because they see us and they say, oh, that guy or gal, they're going to be able to pay interest for a long time. Look at their credit score. It's really amazing. And so I'm going to go ahead and give them a loan and charge them interest, and then they'll just pay me. So that way they can have what they want today. Maybe they don't need it, but they want it. And I'm going to help them get it because I'm going to make money by doing that. And that's the reality. I just want to really anchor in on the reality that we finance everything that we buy in life. That's the first when I'm on my calls, I talk to people, I say, hey, most people, not you guys, but most people don't even realize they have a problem. So why would they be looking for a solution? If they don't understand this fundamental truth that I'm going to show you today in the two examples, then why would they want to do anything else? And here's another truth, right? Some of you are already banking. Some have multiple policies. And, in R. Nelson Nash's book, he talked about there's always two jobs in the world, right? There's always the first job, the job of making money. And then the second job, once you learn how to make money, once you are following the laws of wealth, paying yourself first, spending less than you're making, and having that financial discipline, really having that vision for yourself, then the second job is the job of banking. And this is the shift, because if we're paying ourselves somewhere between that 10 and 25%, and we're going to finance things in our life, the difference between the common approach and this uncommon approach is, in the common approach, we continue to earn money. Maybe we save, maybe we don't. Life happens, and what happens then? We're reactive. We have to go and take a loan, completely strip away our emergency fund, because we weren't prepared for the things that are definitely going to happen. The one guarantee in life, which you guys all know. Pop in the chat. What's the one guarantee in life? It's change, right? It's change. And with that one change, then, or when change happens, would you feel more comfortable if you could be proactive, knowing that you had this fund sitting there because you shifted your financial environment from trying to run as fast as possible into a wind, and you're doing, extra leg work, and you're working out harder, you're losing weight, and you're still trying to run into this headwind? Well, why not just wait till the wind stops blowing and then run? You're going to run a lot faster. Or even better, turn around and let that push you, right? Let that be a tailwind for the rest of your life. And that's really what I'm going to show you today in these two examples. And this is the difference between being either first in line for your money or last in line for your money. What does it look like to be first in line for your money? What does that actually look like? And this is the builder system. This is a system, when you're ready to make this change, that this is how this will work. So let me go through the first case study here. And when you've seen this in the past, you haven't seen it in this kind of details, because I was able to use the technology, the AI, the vault that we have now available to us, right? So this happened after a conversation like this, where they saw the full presentation, from buying cars to recapitalizing their system to how money works and all the other things. And then we got into this example of this debt this business owner had, this chiropractor. And he came up to us after the presentation. He's like, hey, can you guys help me out? I have all of this debt. And he showed us. He's like, we're like, yeah, what are you working with? Show us, like, financially weigh in. Let us know where you're standing. And so he gave us all of his debts. It was about $5,777 a month, which is equal to about 70 grand a year, $69,234 to be exact. And when we put this into the vault, it reorganized and said, hey, the fastest way to pay off this debt is going to be the avalanche approach, from the highest interest to lowest interest. So that's how I reorganized this. And the reality for this, the common approach would have this chiropractor taking 26 years to pay it off. And the worst part is, if he took the common road, the common approach that most Americans are on, he would pay $316,000 of interest on all of these purchases. Is that not nuts? $316,000 of interest, almost more total than he owed on the house and the condo combined. That's crazy. He's basically buying another condo and another home for the bank, for the banker. And this is the importance of shifting this, like I said, shifting this financial environment. So when we talk to this doctor, remember, we're always changing one thing. We're not asking anybody to work harder unless you have to. We're not asking anybody to stay longer unless you have to. But all we're saying is, let's move one thing. Let's look where your money's going today, and let's put it in the foundation. And this doc was putting about $25,000 a year in qualified plan. He was locking it up with Tio Sam. And we said, hey, doc, would you be willing to make that one change and start putting this into your specially engineered system, from this mutually owned dividend paying company? And he was like, yeah, sure. That'd be awesome. Let's do that. And so what happened so in year one, he puts in $25,000. And when he puts in 25,000, he has an immediate cash value about $13,100 and $217. He's able to pay off Wells Fargo and Discover right away. And you can see in the vault, it shows you advised him to take a loan out in month 6. So it wasn't immediate, like we tell you. It wasn't within that first 30 days because it made more financial sense as far as interest goes to wait a couple months, pay it off. And he went from immediately recapturing $432 a month. Okay. And then year 2, the doc does the same thing and puts in the $25,000 again. And he has a cash value now of $14,084. And then from there, the payments back to himself equal $5,184. Total cash, $19,268. He's able to knock out by the end of that second year, Lowe's, the private loan, recaptures, additional money, additional about $1,200 a month. And now he's got $1,641 that has come back to him, which is crazy, right? That's a crazy amount of money. His overall debt goes down. He's paying less in interest to the banks. And we're only 2 years in. He's already lowered that initial amount of money he owed quite a bit, right? And then when we look at this, so I missed year 3. So we're going to jump ahead. We're going to go to year 4. Smash, like, and ring the bell so you can be alerted to new content. We have a lot of people watching the content, but not everyone subscribing. So make sure that you're subscribing to the channel. It means a lot to us. And even better, it helps spread the message. We want to invite as many people as possible to take back control of their money, to have guaranteed. So smash, like, and ring the bell. Like Connor loves to say, it might just turn blue. I will go back to the other presentation. So we're going to skip around a little bit today, but we're going to have some fun still because perfect stupid. So here's his debts, like I said, organized. Total debts, 316 grand he would have paid to others, right? Now in year 1, just by shifting that one thing, he puts in 25,000 into his specially engineered whole life policy. Cash value within the first 30 days, $13,217, as you can see there in the vault. And then he recaptures and knocks out Discover, knocks out Wells Fargo, the 2 highest interest cards, and recaptures $432 a month. Not bad, right? Over $4,800 in year 1. The total amount he owes goes down, and he's on his way to changing his financial environment. Year 2 does the same thing. Deposits $25,000, has a cash value of $14,000, so it already has more than he did in year 1. Payments back to himself, $5,184. Total cash, $19,268. I know it's a wall numbers, but then you can see Lowe's private loan. So within 2 years, he's already paid off 4 of the debtors that he had, and the highest interest ones right away. So he's already knocked out all the double-digit ones. His total owed goes down again. Year 3, chiropractor still working hard, seeing just as many patients, but not too hard. Makes the same deposit. Now his cash value's almost up to 90%, not 21,642. Total amounts going down to 313. He's up to recapturing 16 something a month. So he's already changing that financial environment. Like I started to show you, how much we put in each year? 25,000, right? We didn't change anything except where his money was being stored. Now he has control. Now he has guaranteed. Now he has tax-free. And we didn't even talk about the cherry on top. Year 1, he takes out 13,000, 2, 14,000, year 3, 21,000 and change for a total of 48,943. How much is left in the policy? Is it the $26,057? The difference between the 75 and the 48? No, right? All the cash value is still growing uninterrupted and compounding. We go into year 4. Remember, we're making something that's kind of boring, a little bit sexy here, but we show you here. Here's the vault again, showing you how much he's taken out in year 4. He's going to be able to puts in 25, takes out 23,106, knocks out the Nordstrom, which is pretty cool, right? That's gets paid off by paying the monthly amount to that. Knocks down the condo payment a little bit more, shifts a little bit back to himself. So recaptures another $276 a month. And now year 5, it starts getting really exciting, right? We're starting to snowball. He's got a lot of money going, 25,000 in, almost the equal amount out. So he's way over 90%. And these are all updated with current illustrations and current everything else. That's why I love this, really showing you how quickly this works. So even though the original presentation of this example is probably 9 or 10 years old with this chiropractor, So the illustrations were different. We're in a different financial time. Just things were completely different. But you see that this works exactly the same, but now it's even a little bit more efficient because we got this system, the vault behind it. So now knocks out the condo, really recaptures a lot more money, down to 105,000 in total debt within the first 5 years. We get to year six, starts out down at 76,000 because you pay on the debts for a year. And something happens that's interesting this year, right? He's putting 10,000 in the policy, cash value of 13,000. He starts a second policy because maybe he wanted to expand his system. He wanted to take some of that extra money that was coming back in, flowing back into his family. It's kind of what I did, where he might have started the second policy on his wife. That's what I did with our family, which I'll show you here in a moment. As I started the second policy on Patty, when I realized, hey, I'm 5 times more protected than her. It's time to really make sure that we're thinking long range. We're thinking like the first principle of infinite banking concept is to think long range, to really start asking those harder questions like, is this money going to make me money again? And so the chiropractor, thought that same thing and started his second policy in year six. Ended up being able to, with the payments back and the two policies, knocking out remaining balance on that home in that year. So now he's got everything recaptured. He's recaptured $5,777 a month. Like, anybody here want basically a $72,000 switch in where the money's going? And his total interest recaptured was over $212,000, right? And this is the slow way of doing it. That's pretty crazy, right? This is the slow way of doing it. 6 years, debt's recaptured. So he's thinking long term. He's got a big old cherry on top as well, which I'll show you here in a moment. And that's a financial swing. So instead of running as fast as he can and wondering why he's not getting any place, he just changed his financial environment over 6 years, and he's able to recapture over 2/3 of what he would have paid the bank. As you see here, he would have paid $307,000. Like, their plan is going to take to 2051, right? Another 25 plus years to be out of debt, if I'm doing the math right. Actually, 35, right? And then on the infinite banking concept, 78 months to be out of debt. And now the whole pivot is he recaptured $212,000, as I showed you a minute ago. Has a death benefit, a guaranteed cherry on top of almost $1 million. A huge shift. And he has over $207,000. Because remember, he kept capitalizing his system at $25,000 a year. And he paid himself back over the next 28 months. So that 5777 is going into his system every year. He's still capitalizing both systems. And he's got over $207,000 of interest into his plan. So I call that the slow, steady way of getting out of debt, right? That's example number one. Case study number two is a rapid debt payoff. And this is one where I actually did a lot of work on the front end. Like, I realized with all these debts you see, when I was looking down the Amex and the Macy's and the Bank of America, we had 3 Bank of America credit cards, the SoFi investment, I was overpaying on a lot of them. So one way to shut down financial leaks is to take a look at your system and see, where are you overpaying on these debts? And as you can see, I had over $3,000 a month flowing this way, right, to other families, to these 10 other families. And I knew this was going to work. After reading Nelson's book, I said, hey, we got to switch something. We got to try something. We got to take action and make it happen. So the first thing I did is I saved for a period of time. I stopped overpaying on all these debts, and I just started socking away money. I started adding more value in the world. I had some things go my way. And so when I started this policy, this is the fast approach, I was able to overfund it to the point where I was almost able to knock out all of this debt in the first 30 days. And so I plugged all this into the vault. Here's the debt I'm talking about right now. Like, you can see, I had $3,048 flowing out. And then if I would have followed their plan, it would have taken me to 2039. This is assuming I started this year, because I just redid all the numbers so I could show you guys this. So another 13 years to pay off these debts. Math, 52 months, right? Another basically 3 years. With this concept, it took me 18 months to pay off all of the debt, and then another 29 months to pay ourselves back. And that's filling back up your opportunity fund. And so as you can see, I would have paid $42,000 of interest to them, to the banks, to the other families, as I like to say. But instead, I recaptured 27,000 of it, right? That's over 50% of the debt I recaptured. And then by the time I got done paying myself back, I had 160 some $1,000 in the system. And guess what we did with that? We took that and we put it to work. So now we have passive income coming in. This took 4 years total from start to finish. And remember, once I recaptured enough to knock out that last loan, because as you'll see here, here's the immediate. We knocked out everything: the Amex, the Macy's, the Bank of America, the Amazon Chase, Fairwind, Sonata, the dental, and we were left with one loan, which was the SoFi loan. Was the only one that wasn't knocked out within that first 30 days. And that shift for us, right? That shift from being a borrower to a builder was huge. Now it took time. It took but it was fun. Like looking at my spreadsheet, I was paying the debts on the 1st, the 5th, the 13th, the 15th, the 17th. And I remember when I switched it and I put on my calendar for every month, like pay the Sipples, pay the Sipples. And so when we did that every month, I was happy to put that money back into our system. It started out as $2,200 coming back every month. By the time we recaptured the next $40,000 that we needed, within that first 18 months, that's when I looked and I said, okay, it's time to expand the system. I am 5 times more protected than my wife. God forbid something happens to her. What do I do? What do the boys do? How are we going to keep going and have the resources we need? So at that point, we started her policy. We overfunded that one as well. And we knocked out that 10th debt and recaptured that additional $933 a month. And that's the shift for everyone. When you shift from being a borrower and changing that financial environment, keeping in mind that we finance everything we buy, everything starts to change, and it changes really quickly. Because when you're a builder, you play by the banking rules. You follow the principles of wealth. And when you start treating all the loans like a business transaction, because that's what banking is at the end of the day. And so are we treating our money like a tool, or is it a transaction? When we look at it, like when we think, again, just write this question down. Who is earning money in this transaction? Is it you? Is it them? Who is earning? It's got to be one or the other. Or who's giving up the opportunity to earn money in that scenario? And this is the mindset shift. This is what happens. This is the first step in being a banker, right? If you have debt, even if you're uber wealthy, if you have debt, it almost always makes sense to knock out the debt first, because you're not taking on any risk and you're recapturing all that interest. And like we like to say, this is what it means to stop being last in line for your money. When you start seeing your system, when you start understanding by making these small shifts, whether I am capitalizing my system quickly or capitalizing my system slowly, either way it works. It's just a matter of how long does it take. And they both take you changing that one thing, that paying yourself first, being first in line for your money, and then putting it somewhere in the specially engineered whole life policy where all of a sudden you have control, you have guarantees. Like Scotty was saying, there's no guarantee you could be here the whole time. Well, when he wrote guarantees, I was thinking, I love guarantees. We should talk about guarantees all the time. Guaranteed level premiums, guaranteed death benefit, guaranteed interest that we're earning that's tax-free, all of it. And that's when it gets fun. For me, this was never just about strategy. It was about finally seeing my money come back to me instead of disappearing forever. Always felt like I was on that treadmill, that rat race. And the day that flipped for me, I knew I'd never go back. When I stroked that check, paid off 9 of those 10 debts, the purpose of today was so you can stop leaking wealth and start treating your money and your banking like a business. Showed 2 case studies, real math, real time frames. One showed you what it looks like to capitalize rapidly, and one shows you what it looks like to capitalize over time. Either way, it is changing your financial environment, bringing all of that interest that used to leave your family back to your family. Now that you know this, make sure that you're scanning that QR code so you can have your personalized review. And we're going to take a clear look at your numbers. I always meet you where you're at, both financially and mentally. We're going to look at where your money's going first and how to flip the order so you are no longer last in line. If this hit home for you today, don't just let this become or stay a theory, not just something you think about, something you cognitively know. Be like Nike. Take action, scan the QR code, jump on a call with me. Let's get your money working for you, because the truth is you're already in banking. You're just not the banker yet. And making this one change will change everything. So as always, thank you for your time, your attention, your energy. I do not take this lightly. Serving you, you giving me your most valuable asset. So God bless. Thank you. And I'm see you right here in the next video. Don't miss it. It's tons of good stuff that'll change your life for the better. Be blessed. Until next time.